Welcome back, ladies and gentlemen. Very nice of you to join us again. Greg Silverman, another session of Come Learn with Me, where we curate a bunch of articles on a weekly basis, and then we take the feedback, we see what the shares, the likes, the views have been like on our various social media platforms, and then we do a Come Learn with Me session. So the top 4 or 5, as it were, we'll read with you. If you'd like to know more about our programs, subscribe and like to this. And then check out the links below to our investment platform. You can see that. You can see our mini group themes for our LinkedIn mini groups. You can see our blog at gregsilverman.com, and you can see our investment platform called Ritterban Invest. And then if you're a manager or a company that is looking for investments from accredited investors, there's also a program called Looking Over the Manager's Shoulder with a link down below. All right, without much further ado, worst performing ETFs of the year. That would be 2021. This is always interesting to me because, you know, sometimes what does bad one year actually does better in another year. So when looking at the list of worst performing ETFs for calendar year 21, several speak to clear themes that dominated the markets over recent months. Volatility names top the list, while China-focused and emerging market ETFs make up the majority of the list, as the Chinese government crackdown slammed tech and education names in particular. Several cannabis ETFs also fell sharply after having reached record highs in February on hopes for legalization. Cannabis is one of our mini groups, so check that out. Now let's squiz the list real quick. Volatility. Oh, Global X. I think Global X education was hit by the Chinese move on banning private education, I think. China, cannabis, EM, emerging markets, ARK, genomic revolution. Oh, another one of our themes. Well, looks like if you bet against all our investment themes, you would have done well last year. Amplify international online retail. All right, volatility fund top the list. 2 volatility ETFs are the worst performers for the year, falling by 72.4% each. That's a the VIX short-term futures, VIX short-term of exposure to near-term futures contracts. The VIX is a real-time market index representation of volatility expectations. The so-called fear index has trended downward over the course of 2021. Basically, the market lulls you to sleep, doesn't it, with volatility? Though market tensions briefly flared several times during the year, index still saw a dramatic decline. Yeah, boom. The broad market equity market has seemingly shrugged off worries about COVID and inflation. COVID seems to be great for the markets. I don't know why, but continues to notch new record highs throughout the year. Cannabis ETFs go up in smoke. Touche. Several cannabis ETFs made the worst performers list, a sharp turnaround from where they were in the beginning of the year as Biden's election ushered in a new hope around legalization efforts. Yeah. So the advisor shares pure US cannabis ETF, the cannabis ETF, up hot. X was up 189.9%. Space became a focus for Reddit traders, helping to drive prices up. Oh, through February 10th. Okay. Well, there you go. What was, right? Through February 10th. However, sentiment quickly turned around and cannabis-related stocks fell for the remainder of the year. Yep, don't we know it? Worst performing list. So after being up 180%, ended up down 40%. ARK Sinks. Oh, whoever wrote this definitely has a sense of humor, right? The suite of funds from ARK has been having a rough year, and the performance of ARK Genomic Revolution Fund was poor enough to make the list of worst performers for the year. ARK funds fared well through the early phases of the pandemic, but tech names that were geared towards a stay-at-home environment suffered. Teladoc Health, a top holding in several ARK funds, including ARK-G, was down 54.1%. The Cabot Growth ETF is another actively managed portfolio that made the list of worst performers after falling by more than 30% in the fourth quarter. China crackdown crushes related ETFs. The education test prep industry was among the first to be targeted by the Chinese government beginning in July, including a ban for for-profit tutoring services. That basically just obliterated that space. As a result, obliterated. The Global X Education ETF, which holds exposure to global companies providing products and services that facilitate education, is the worst performing ETF of the year, aside from VIX, falling by 50%. The government has also put pressure on other industries, including technology and gaming. This explains why several China and emerging market tech names show up on the worst performing list. The KraneShares CSI China Internet ETF, which tracks overseas lists of China's internet sector companies, fell by 48.7%. More broad-based emerging market tech ETFs, such as Global X Emerging Internet ETF, mouthful, made the list as well, falling by 38.2 and 32.5%, respectively. Though the ETFs are diversified across various countries, over half of each portfolio is exposed to China. Very interesting. At least I find that interesting. Guys, I hope you find that interesting as well. You know, yesterday's losers sometimes become tomorrow's winners. So always good to know what's doing badly as a contrarian. I hope you enjoyed that. Please subscribe and like the video and subscribe to our channel, and join us again for another Come Learn With Me session soon. And take a look at the links below for our various programs. Greg Silverman, out for now.